Thanks for joining David, Kevin, Alex, and myself for the market update for the month of May. May was another strong month. In fact, we had our ninth week in a row of positive returns on the S&P 500. We haven't seen that since 2023. The U.S. market measured by the S&P 500 was up 5.26% in May. The Canadian stock market measured by the S&P TSX index was up 2.37% in May. And the Europe and the Asia Pacific market measured by the MSCI EAFE was up 2.6% in May. I'm going to pass you over to the guys and they're going to do a little bit of a deeper dive. But as always, if you guys have questions, want to update or review your plans, happy to do that anytime. Hope you and your family are doing well. Take care.
We're going to start the market update talking about the war in Iran. And by and large, the markets have decided to move on from this conflict at the moment, even though there is no permanent resolution. We do have a temporary ceasefire, and there are reports that that will be extended for a further 60 days. Oil finished the week or last week at $87, which was down 10%, marking the lowest price for oil since the conflict started. Lower oil prices helped cool bond yields. The US 10-year Treasury yield fell 12 basis points on the week to below the key 4.5% level, while the 30-year bond price moved back below 5%. Equity markets continue to move upwards, largely because of the price of oil coming down, lower bond yields, and some firm momentum within a bunch of the AI stocks. The Iran shock as being largely viewed as more of a temporary disruption rather than a long-term inflationary problem for the markets. And so we'll have to wait and see whether that plays out, how long this lasts. But at the moment, the market is still continuing to look past it.
Meanwhile, in Canada, it appears that we may be in a recession. A technical recession is measured by 2 consecutive quarters of negative GDP growth, and with the first quarter of 2026 coming in at minus 0.1%, which is only ever so slightly negative and could be revised away in a few months' time when more concrete data becomes available. It does appear that the Canadian economy is in a what we call a technical recession. And clearly Canadian businesses as a whole have felt the impacts of the trade war with the United States, which began roughly 1 year ago, with our Canadian economy barely having grown over the past year. Now, what's interesting to note is the disconnect between the economy and Canadian stock markets. Over the past year, the Canadian stock market has done incredibly well on strong resource returns from gold in particular, and materials such as energy, as well as the Canadian banks. The Canadian financial industry has done incredibly well, with Canadian banks trading near record highs in terms of their price to earnings multiple, but that the earnings from the banks have been incredibly robust over the past year. So something to continue to watch, but it is interesting to note that even though the economy may not be firing on all cylinders in Canada, it doesn't necessarily always mean that the stock market will falter alongside it. But going forward, we'll see how the Canadian consumer continues to hold up. But for the time being, interest rates in Canada are relatively flat. There is some expectation that it might go up, which could impact the Canadian consumer and Canadian businesses further. So we'll continue to monitor the situation here at home domestically in Canada.
So the hottest topic in the markets currently is the upcoming June 12th IPO of SpaceX. Now, given the scale and the unprecedented nature of the offering, we wanted to go into some of the details of what we know today, as well as some of the potential for volatility, as well as spin-off effects that are going to come from this. So SpaceX is reportedly targeting a market cap of about $1.75 trillion to $2 trillion. And they're aiming to raise about $75 billion through this offering. Now, that would lead to about 3 to 5% of shares being available for trading immediately. This is what we call the float. Now, traditionally, a typical IPO float is about 15 to 30% of shares. But, with SpaceX targeting such an extreme valuation right off the gate of, $1.75 to $2 trillion, they have the ability to offer less shares initially while still hitting their target raise. Now, on the flip side of this, offering such a low amount of shares initially can have some spin-off effects and lead to increased volatility than we might normally see in an IPO.
As Alex mentioned, that first day with so few shares being available, we could see an immediate price spike on the offering on day one, as if there's a huge amount of interest and people are willing to pay that price multiple on the initial offering. Now, what could happen later on is as these lockups for insiders expire, i.e., all the insiders at the company, people like Elon Musk and major institutional investors who got in, years ago into SpaceX, they'll eventually have the ability to sell their shares, but not on day one. So as those initial lockups expire, which coincides with Q2 and Q3 earnings, if those results that SpaceX has to now publish as a public company are disappointing, you could see a negative effect on the share price, which could potentially be extreme if the results are disappointing. Eventually, after a year, 366 days, Elon Musk, who is the single biggest shareholder, controlling 41% of the company, he will be able to sell shares. Now, it's not likely that somebody like Elon Musk will sell a tremendous amount of shares. As we all know, billionaires such as he, usually, if they want to tap their wealth, will borrow against the shares rather than selling them. But there is some potential that he could, sell shares, and that could depress the price. The other interesting aspect of the SpaceX IPO is, given the nature of the size of it, it will be included in all of the major stock indices, such as the S&P 500, NASDAQ, MSCI World. And so all of these ETFs will be forced to buy the stock regardless of what the price is. And so there will be some technical pressure perhaps on other mega cap stocks in the market, like Microsoft, Amazon, Nvidia, so on and so forth. Those other big tech companies that make up a large portion of the index currently. The indexes may be forced to rebalance to companies like SpaceX, and that may come at a cost to some of the other mega cap companies in the index who will have to be redistributed, especially if there's a significant demand for SpaceX that may coincide with positive earnings results. It'll be a shot in the arm for other private companies like Anthropic, OpenAI, and the list goes on, that are considering their own IPOs later in the year in the United States.
To sum things up, this upcoming SpaceX IPO isn't just about SpaceX itself as the company, but it's more about the broader environment of the US market and these mega IPOs that are going to start coming out. How are they going to be able to link themselves to all the major indices in the world? And how are these ETFs that purchase these indices, how are they going to adapt to buying these companies right out of the gate? We're expecting to see over 100 IPOs this year and approximately $165 billion being raised. So this SpaceX test is going to be important for seeing where investors' heads are at currently with the AI trade. Are they willing to pony up a lot of dollars towards these AI trades still? Or is their demand starting to wane and they want to see more results coming out? SpaceX is going to be a good test to see where we're at and see where things might go forward with companies like OpenAI and Anthropic, like David had mentioned. If you've got any questions about anything going on in the markets today or how any of these IPOs might affect your portfolio, please reach out to us. We're happy to help.
Take care.